Good afternoon, everybody. My name is Thibault Binier, co-founder of Hibachi. I'm here with Varun from Hashflow. Very excited to speak with everybody about the future of trading and consumer apps. We're going to be talking about ZK. We're going to be talking about perpetuals. We're going to be diving into all those things. But at the end of the day, we're very much focused on the end user. And so, I think as we get started, one of the things that we'd like to lead with is some history. It's important to kind of understand why we're here and how we got here. So, Varun, the floor is yours.
Absolutely. Thank you so much. And, I'm Varun from Hashflow. So, like Thibault mentioned, today one of the things we want to talk about today is essentially, I like to call provable computing. Essentially, what we're seeing is a fundamental shift in the way we compute, right? So, where we're moving away from trusted systems to trustless systems, right? And as Thibault mentioned, before we talk about these, diving a bit into the history of computing is kind of a good way to paint a picture of what's to come. Right? So if you think about history of technology, it's always been about removing trust from the equation. Like if you think about transistors, which replaced unreliable mechanical switches and giving us compute as we know it today. Then you had the early 90s, you had TCP/IP, which basically removed the need for centralized gatekeepers, making the internet unstoppable. Then late 90s, we had cloud computing, which basically abstracted infrastructure and allowed computation to scale and be more accessible to all of us, right? And then in the 2000s, we had the iPhone, which basically put all of this in our pockets, making compute an extension of ourselves. Right? So if you look at all these breakthroughs, you'll see that they have always been about removing friction by replacing human discretion with deterministic systems, like systems that basically do not rely on trust, right? They just simply work. So, keeping this pattern in mind, what we're seeing now is provable computing, which is the next era in the evolution. The idea is how can we run applications that also prove what they're doing without the need to change the entire stack, right? And years ago, for years, ZK has been considered this research breakthrough that wasn't quite ready for production. But the year's 2025, and it seems like it's finally the year for ZK, where the stack is fully ready. It's fast enough, it's efficient enough, it's mature enough to be the backbone for real-world applications, right? And we're not talking about some theoretical experiments. We are talking about fully production-ready software that is already transforming the way we operate exchanges, protocols, and various other applications. And in this particular instance, we wanted to discuss how this impact. Hibachi is one of the exchanges that we designed that basically runs as a ZK coprocessor. The idea being you run a centralized exchange, but then you prove its solvency on chain so that at any given time you have mathematical guarantees that the exchange is solvent and you avoid another SBF fiasco, right? So, but to dive more into exchanges, obviously we're going to talk a bit more about Hashflow XOS and the infra that we built to enable such exchanges, but also I'd like to, you've been building exchanges, so why don't you tell us more about history of exchanges and why Hibachi is ready for prime time and why is this the moment and why this is needed?
Yeah, absolutely. It's really kind of interesting to see the come up on the compute side of things with ZK, and it's also I think helpful to look at it from an application point of view. It's no secret to us that trading is probably the core of our industry. It's very clearly what has the most product market fit in blockchain and crypto. So exchanges are really at the foundation of everything that we do. So just taking a step back and understanding kind of how we got here. we look at the history of exchanges, and we can even start actually from traditional finance and the way that those are built and designed. And the bottom line there, without getting into too much detail, is that there's endless infrastructure, endless middlemen, and just it's a very actually opaque, inefficient system. So one of the things that I thought, that I think is very exciting about our industry is that we can build very fast and trustless exchanges, right? At least that was the goal. And I think it's taken us some time, but I think again we'll get to the point where why now is actually the real moment in time. So just the first generation of exchanges in crypto were the centralized exchanges, and they onboarded millions of users. To this day, they carry the most users out of anything that we have. So that centralized exchange, obviously, the traits there are going to be very performant. The UX is usually very good. You can kind of trade seamlessly, and you don't really have to worry about anything. So sure, there's that kind of good user experience component, but they're very opaque. They're black box exchanges, and the truth is, we went from trusting one institution to trusting another one, and we shouldn't have to trust anybody with our assets. I think that's at the ethos of what we're doing. So, things like FTX happen, and then the decentralized exchange comes about, and suddenly everything is decentralized, and we don't really know why, other than it's so that you have control of your assets, which that in and of itself is the right call to action. It's a good value prop, but we lost a lot of that performance. We lost a lot of that ability to really trade at speed and with deep liquidity, etc. So unfortunately, we see a history of repeated failures in terms of our exchanges. Until I think tying it back to ZK, we find that today is actually the right time to build the third generation of exchanges, what we like to call the provable exchange, where it's combining everything that you like about the centralized exchange and kind of taking a step back as well and looking back with the concept and the notion that the user doesn't care what's decentralized and what isn't. At the end of the day, they want a good trading experience, and they want to make sure their assets are safe and they have that proof of solvency, right? So that is the third generation of exchanges for us. That is the end game for also a really good use case for ZK. So Varun, I'm gonna hand it back to you to get a little bit more context around how we use ZK in as an exchange, but also just in general, how it comes into play to allow for a very good trading experience, a fast exchange that has that proof of solvency, where you don't have to trust another. It's fully trustless.
Absolutely. I mean, one more thing I want to point out here, when you talked about user experience and decentralization, right? So, people often over-index on security, but then I think Hasib mentioned a good point the other day. But the thing we should be asking is security from what, right? So from whom? Because you can argue that, self-custody is the most important thing, but then not necessarily, because when you say self-custody, you're basically you're making the trust assumption that the person who custodies the keys is the most secure person to trust, they trust themselves with their own security practices, which for the most part is not a very good assumption, right? Because most people don't really have very good security practices. So in that case, if you're telling me that, you can't really trust yourself with your own keys, which is the case with many, many people, which is why they prefer institutions, somebody else to do the key management, because they're essentially outsourcing this idea of having secure practices to take care of them, right? So they're in a way deferring the idea of key security and management to somebody else. And in most cases, if you're using applications like exchanges, it falls on, it's on the exchanges to have really good practices to do something like this, right? So, and obviously, the history is a bit murky when it comes to exchange practices and key management, right? So obviously we had Mt. Gox, then we had FTX was a big fiasco. Bybit not necessarily as a bad actor, but again, unfortunate. But anyway, we've seen this over and over, right? So, and this is where I'm like, what are we doing as an industry? How do we address this without having to compromise user experience and performance, which is essentially paramount, right? You can't really build an app and expect a user to learn all these technical nitty-gritty details, which is almost irrelevant for most people to use something. So that's sort of where the design philosophy here is to enable exchanges, or even more broadly speaking, enable products that do not compromise user experience or performance. They operate and make trade-offs that directly correlate to a better user experience, right? You should not be compromising that at the cost of anything. But once you have that, then how do you ensure that you don't get rugged, right? And this is sort of where, 5 years ago, like I said, you could have said like ZK still is in its infancy. It's not quite ready yet. We have to do other things, but it's finally here, right? So we can finally build systems where you don't have to trust a centralized human operator to do these things. And the thing is, the magic of ZK here is that it is not front-facing at all. So as a user, you don't ever need to think about what's going on. You simply use the application and just do your trades, right? On the other hand, security almost is built in to the application by virtue of using ZK, right? So, and that's sort of what we wanted to enable with XOS. And to get a little more technical here, I think the way we design the system is, if you're an exchange operator, you basically run a centralized system, you run a central limit order book, but then what you do is you batch your transactions and you compute a zero-knowledge proof on these that basically proves that the state change that happened over time through transactions is always preserved, right? It's done correctly. And then the ZK proof itself is published on chain, so anybody could verify that the state transition that happened, the way user balances got updated, it was done without any funny business involved behind the scenes, right? So that essentially guarantees the integrity of the order book mathematically without the need for, like McKinsey going there and giving you an audit report. So anyway, I guess ZK is like the mathematical version of McKinsey, right, where it basically removes the need for audit firms, and it basically allows anyone, anywhere to independently verify the integrity of any system, not just financial, but over time, just the entire digital economy, right? So that's kind of where we are. And obviously, that's sort of where, Hibachi is one of the first things that's out there where you can really feel the magic of ZK in action without really seeing ZK, which it's an interesting meta, because ZK is always about, allowing you to verify things without disclosing things. And in an interesting way, it kind of works exactly that way, but at a more macroscopic level. So, if you want to share anything there.
Yeah, absolutely. I mean, I think it's absolutely right. Just the end user doesn't actually need to know that there's any ZK in the background. We just kind of have to be very clear about the value prop and what that means for them, right? So again, for us, it really just comes down to that proof of solvency. And that's actually the first step. I think there is a lot of work that's still going on to really expand from there on the privacy side. And we can talk a little bit about that. But just one thing I want to make very clear is that doesn't neglect the fact that you still have to build a good exchange, right? So we can talk ZK all day. We can say that we're the ZK exchange, but
absolutely. I mean, without a good exchange, it doesn't matter what kind of complicated stack you have. No one is going to use it.
It's not enough to just say I'm a ZK exchange and we're going to get.
So what makes a good exchange?
Exactly. So what does make a good exchange? So at the core, I think for us, obviously, we look at success stories and why people trade where they do, and it comes down to a few things, right? Liquidity being a very important one, especially if you're trading at size, and then the markets that you have. One thing that I would say as well is perpetuals. They're a very exciting asset class that is also native to our industry. I think when you look at TradFi, it's not a thing, right? They trade options, sure, but perpetuals are actually very exciting in a way, because you can trade with leverage and just take a directional position on any asset without having to actually hold the underlying asset. So the markets that you list, obviously, that's number one. You have to be able to list very fast. You have to be able to have deep liquidity for those markets. And then everything else kind of follows, right? The speed, the proof of solvency, I actually think those are secondary. The main things that people look for in exchange is like, can I trade meme coin X on this exchange? Yes, okay, this is now being considered as a potential viable option. There are many exchanges, so we all compete on markets. We all compete on liquidity. So I think there's, jumping ahead a little bit in terms of what we're thinking about at Hibachi from that point of view, we want to introduce different types of markets, right? The cycles are getting only faster from inception to death of assets, which
Yeah, like at least last cycle I was making this joke. It was a little more fun because at least you had 6 months before you got rugged. Now you have to do it. Now
you get rugged in an hour. You get
like,
the full.
I got desensitized.
So you can imagine as an exchange, it can be a little bit complicated to operationally kind of be at speed with those things. And you look at kind of vaults as solutions and kind of decentralized or public liquidity management solutions that are out there. But at the end of the day, you have to be able to list fast in order to be a good exchange. So kind of took a little bit of a side note there, but that to me is what a good exchange means. What do you think?
Is it fair to say like essentially liquidity is the king, obviously, and then speed, because many real serious traders care about that sub-millisecond latency to go in and out, and then obviously like being able to list new markets quickly. I think those are like the things that an exchange cares about, and the users of the exchange care about. Is that accurate?
Yeah, exactly. I think that's at the top of the list from all the traders that we talk to, and there's a lot of kind of behind this. I do want to, before we wrap, get a bit on the privacy side and what Hashflow is.
I was going to ask you actually, because one of the comparisons I see on Twitter now is like Hibachi is a ZK Hyperliquid. Yeah. And my question is, how do you even differ from Hyperliquid? What is it that you're offering, or we are offering, I guess, that makes it more interesting to even pay attention? Why should I care?
The key to your question is actually a lot of it is in the roadmap. We're getting out of a beta right now, so the foundation is there, and you can go and trade, and we have a running exchange. But from here onwards is when I think the party really starts. So without over-announcing or kind of getting in trouble with the team, we're looking at things like multi-collateral. We're looking at lending markets. We're looking at mobile very actively, and all those different market types that I think are exciting. So just going back to ZK Hyperliquid, I think ZK, again, it's the foundation of who we are. It's really what allows us to give that trustless environment and that proof of solvency. But from now on, we have to build the Hyperliquid. So the ZK part of it is built, and then now we're getting to the point where we just can focus on what the actual user is going to be experiencing. Yeah,
I like to think I call it the PFP. Basically, it's like privacy, fast, and then proof of solvency, basically. Of PFPS. So
exactly.
So basically, because one of the things, this is in general my criticism around on-chain order books to begin with. Like anytime you say put everything on-chain, we care about transparency. Turns out like not everyone wants all the transaction data to be on a public ledger, right? So because like I don't want anyone to know that like I paid you $10 for something, I don't know, right? So. And this applies to even more relevant, it's even more relevant when it comes to like trading, when you're trading billions of dollars. I don't want my balances to be, public to anybody, right? So how do you avoid that? Like how do you ensure that, you don't disclose your information? And that's one of the reasons why many of the big exchanges, right, they do proof of reserves where the exchange has X amount of money, but you don't really know if that money is sufficient to meet its liabilities, right? And one of the reasons why they haven't done it yet is because they can't do it without disclosing user information, and that is not really good. And that's one of the things that ZK actually solves for, is it allows you to prove your solvency without disclosing user data, which is actually a really critical component, which you don't really get unless you're running, if you don't really get that if you're running a on-chain order book, right? So privacy is actually a critical component there. Then obviously speed we talked about, like, if you're retail, maybe 1 second is not a big deal, but if you are somebody who's trading serious money, then you do need that low latency, in the order of milliseconds, and then obviously knowing that the exchange is solvent, it's not going to pull an SPF on me.
Yeah.
That's assuring, to say the least.
Yeah, absolutely. Just to wrap up, because we're coming up on time, the last thing I would say is this is amazing timing. I think we're just getting started. People are starting to talk about, they're starting to look for the next generation of exchanges, and we've been working at this for a really long time. So just generally speaking, stay tuned. There's lots coming, and excited for it.
Yeah, no. So the future is just isn't decentralized. It is provable.
The future is provable.
Exactly. All right. Thank you.